Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Friday, February 9th, 2018. Happy Friday, everyone. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session, we talked about the potential for price to slide lower here, given how failed new highs had formed basically across the market. I mentioned yesterday about 154 candidates. Sell candidates rose right to the top of the scan. Every single sell candidate we had on the list, which was at least 15 deep, dropped 4 to 5% yesterday on this big move down. But you got to be careful down here. I mentioned before, I don't think the low is in just yet. We could come down here and test this low at some point, but that doesn't mean it has to happen right away. At times, we could see this thing just whipsaw right back and forth. But already, we're seeing signs that we are attempting to push a little bit lower. You see prices pulled back toward the midpoint of yesterday's range, not quite to it, and then already back down below today's mid. You know, those types of things typically imply that you're going to at least seek a new low below yesterday's low and try to probe a little lower. What I mentioned before is that, you know, whenever it happens, whether it's soon or whether it's, you know, a month from now, whenever it tests prices below this 25.29 and into the LVN, perhaps into 2500. If there's a trap down there, if there's any rejection below this low, it could be a fantastic opportunity to fade it back to 2703 with the longer term potential of seeing it rise back toward the upper end of the range. So keep that in mind. All right, let's take a look at the NQ now. NQ looking very similar. After all of this major selling pressure has occurred, you can actually see that the NQ and the ES has, the correlation has gotten very, very tight compared to what it had been. I mean, the correlation was almost identical yesterday, the day before, etc. Very, very tightly correlated markets right now. That tends to happen in high volatility times as the programs and algos all trade very similarly on these products. Again, this is a very clear LVN down below, 6170, 6150. Bottom of the key ranges here. We could look for a drive downward through the bottom of this range at some point, and if there's any rejection or failure and we pop back above the bottom of the range, that could be a quick signal that we're headed back to 66.53 with a shot to even see a continuation back up. So again, we could have more short-term downside here, and then if there's a test below these lows, that could be an early sign of rejection at that point. Here's a look at crude oil. This is a real clear picture of what happens when you pick very, very solid levels in the market. You can tell that 63s were such a significant level. Even this level here, 63.75, those were great little balance points. But as soon as this failed here, we knew that this level was going to be tested, and if broken, would lead to this opposite line here, 58.75. And at first, we were looking for signs of rejection. They never came, and so the focus became looking to push this back toward 58.75 and that 59 zone, and perhaps even into this HVN down below, which would be into the 57.50s. So that could certainly be a possibility there. I think at the very shallow end here, we could see a bounce here and perhaps come back up and start to trade perhaps between 59 and 63 for a little while. So right now, I still think there's a short-term momentum is down. We could see a test in this area, and then at that point, if we do see a test there, expect perhaps a short-term bounce in that area. So that's what we're looking for here in crude. When we take a look at gold futures, you can see gold has continued to slide lower ever since failing up here around 1334s. We haven't quite gotten to 1306.60s that we were talking about before, got to 1309 evens, but there's still time there. Again, what I mentioned with this one is right now the pattern isn't as clear as it had been before, but we do have a range of activity that could start to take place between basically 1305 and 1365. So there's about a 60 handles here where we could begin to trade in this range for a while before something significant happens. So right now, be careful and cautious on gold, not really giving a whole lot of edge at this moment with current price levels at this time. Here's XBT. XBT is holding. This is a very, very clear pattern right now that's developing. You have to be very careful with this one. Obviously, this is a very bearish market overall. This market has had no love above prices above that 8-period moving average. That's a pivot-based EMA. We had a major rejection down on these lows, 58.80, popping up, and this right here is a bit of digestion, absorption, where they're holding. And the goal here would be for an upside stop run for bulls that could get you back toward 10K, maybe even back to value at about 11,300. But again, any pop up here could be met with selling pressure that leads to another round of weakness. If there's any push above these levels and then a rejection up here, the stops below these 3-day lows could be at risk, and we could be looking at weakness ahead. So right now, very tightly coiled price action on a 3-day range basis. This is very narrow, and we could be looking at expansion in the short term here. But again, given the trend, any pop up could be met with selling pressure that leads to another round of swing weakness. All right, that's it for now. Let's see how these play out heading into the weekend. Good luck and trade well.